I am D K Sinha and you are watching DK Global Market Insights. Before we begin our analysis, an important disclaimer. Market returns are never guaranteed, but when we do the analysis and research properly, like fundamental analysis and technical analysis, we do get an edge in the market, but risk management cannot be ignored. This week, the US markets rallied strongly, but under the surface, we can already see few warning signs: fear in the sentiment, rising yields, and that interesting inside bar pattern on both S&P 500 and Nasdaq 100. Let's look at what really happened this week. Let's begin. Market overview. Starting with the US market snapshot, the S&P 500 gained 1.7% this week. Nasdaq 100 jumped 2.46%. Dow Jones was up by 1.56%, and Russell 2000 rallied the most, up 3.73%. That means small caps led the week, showing improving risk appetite. If we compare this with the global markets, the picture little changes. The UK's FTSE 100, Germany's DAX, and Japan Nikkei 225 all closed lower. The Hang Seng dropped nearly 4%, while India's Nifty 50 stood out, gaining 1.68%. So globally, mixed cues, but India clearly outperformed this week. Market of the week. And yes, our market of the week outside the US is India's Nifty 50, up 1.68%. It showed a strong relative strength compared to the global indices. We will revisit Nifty on charts later in this video. Crypto this week. Meanwhile, crypto had a rough week. Bitcoin fell 7.22% and Ethereum dropped 6.45%. This sharp fall shows risk of behavior. Investors are preferring safer assets amid tariff and inflation worries. Market sentiment. Now let's talk about the market sentiment. The fear and greed index is at now 27. Is still in the fear zone, but slightly better than last week's extreme fear reading of 23. The momentum chart shows S&P 500 trading well above its 125-day moving average. Price action remains positive despite nervous sentiment. The put-call ratio, however, has climbed to 0.66. That means traders are buying more puts for protection, a sign of caution. So the markets are climbing a wall of worry. Price is strong, but emotions are still fearful. Volatility. Volatility cooled a little this week. The VIX index slipped 4% to 20.77, is still above the comfort range of 12 to 13.5, meaning traders expect short-term swings to continue. So volatility remains elevated, not alarming. Macro highlights. Now let us look at the bigger picture. The US economy and policy updates. First, a CNBC survey shows President Trump's economic approval rating has fallen because of concerns over inflation and the recent government shutdown. Public confidence is getting a little shaky. Next, the US Treasury yields rose again. The 10-year yield touched 4.01% and 2-year is at 3.46%. So the yield curve is normal as of now. And finally, tariff costs. According to S&P Global, the new tariffs may cost business up to $1.2 trillion this year, with most of that burden falling on consumers. That could push inflation higher again. So while markets rallied, the macro background stays mixed. Tariffs, inflation pressure, and policy uncertainty remain key challenges. Technical analysis. Now let us move to the technical side. Both the S&P 500 and Nasdaq 100 have formed an inside bar this week. What does this mean? Let us check out on the charts. First, we will do the technical analysis of S&P 500 and Nasdaq 100 and then move to the market of the week, India's Nifty 50. This is the weekly price chart of S&P 500 index. Finally, it closed at 6,664.01. The most important aspect is to see the formation of the candlestick pattern this week. In the prior week, there was a massive fall and there was a formation of the bearish engulfing candlestick pattern. But this week, market opened with a gap up and then formed inside bar. What does this mean? That suddenly the bulls came in control of the market. They pushed the market higher with a gap up opening, and then ultimately the entire week had a candle which is a spinning top formed within the body of the bearish candlestick. It clearly indicates that ultimately there is a lack of downside momentum. But this needs a confirmation. How this needs a confirmation? The high of this bearish candle is something around 6,765. If the price breaks out this level, then we might see an upside move in S&P 500. But the outside bar low has around 6,550. So this becomes an important immediate support in S&P 500. If it breaks down below the low of the outside bar, then probably we might see some more correction. If you do the retracement analysis of the prior impulsive wave, price has taken support exactly at 38.2% retracement level. So the demand area is 6,500 to 6,550. And if it breaks down below this demand area, then it might test the EMA 21 and a golden ratio, that is 61.8% retracement level, which comes at around 6,389. Overall structure is bullish. It is only we have to see in the coming week as to where the price goes. It breaks out the high of the outside bar or goes below the low of the outside bar. Look at the daily price chart of S&P 500. Price has taken support here. Price has taken support here. Once again, the price has taken support here. What we can see, the entire week candle has been formed within the body of the prior bearish candle. So all candles are inside the body of the prior week candle. And during the last trading session, there is a gap down opening and then a recovery and a formation of a bearish piercing candle. So in fact, if you read the psychology of the market, probably bulls are in a better control over the bears. Now this is the weekly price chart of Nasdaq 100. It closed at 24,817.95, and here too we can see the formation of similar kind of inside bar showing the similar kind of characteristics in the market. In the prior week, there was a bearish candle, a bearish engulfing candle, which took support at 38.2% retracement level, which is a derivative of the golden ratio. So immediate support is 24,200, which is the low of this bearish candle, and the high of this bearish candle is 25,996. We need to watch carefully in the coming week whether it breaks out above 25,196 or breaks down below 24,200. If it breaks down below 24,200, we might see little more pullback in Nasdaq 100. And if we do the retracement analysis in the similar fashion of the prior impulsive wave, then 61.8% retracement level, that is a golden ratio, stands at 23,700, which has a good support. And earlier we have discussed about a gap which is existing at 23,242 is the major support, which coincides with EMA 21 as well. Now this is the daily price chart of Nasdaq 100. We can see the support here, support here. So this trend line is very important, acting as a dynamic support, coincides with EMA 55 as well. So becomes more relevant in terms of dynamic support. Here too we can see the number of candlesticks that has been formed in the week are all inside bar. But price is respecting EMA 21. During the last trading session of this week, what we can see, it has formed the bullish piercing candlestick pattern. Again, it indicates that the bulls are in a better control over the bears. Now, I'll tell you one more thing. This is the well-defined impulsive wave. If you use the Fibonacci extension tool or expansion tool, what it indicates, I'll do and show you. This is the extension tool I am using. So price has attained the level of 127.2% expansion level, and this correction started, which was well expected because it attained the level of 127.2% expansion. So if it breaks above 25,196, which is the high of the outside bar, then probably next potential level on resumption of the trend could be to 25,838, which is nothing but 161.8% expansion level. Now let us talk about the market of the week. India's Nifty 50. This is the weekly price chart. Very significant breakout has taken place in Indian stock market. We can see resistance, 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 and now the price gives a breakout. So it has earlier made an all-time high of 26,277.35 way back in September 2024. So it is approximately 2% away from the all-time high. Once it takes out this supply area, quite in vicinity of the all-time high, then there will be major breakout of this rounding pattern. So we might expect some kind of consolidation in this supply area before it gives a breakout. And that's a healthy sign. If it consolidates here, then breakout would be much healthier. Conclusion and takeaways. To sum up, US markets showed strength, but the inside bar tells us a breakout is yet to come. Fear index is at 27 and VIX around at 21. Show investors are cautious, not euphoric. Macro risk, tariffs and yields remain on the radar. India, however, stands out as one of the most resilient markets globally this week. See you in the next deep dive. Learning never stops with D K Sinha.